Well, hello everyone and welcome along to Fonterra's 2016 interim results broadcast. With us today, it's a pleasure to welcome Chairman John Wilson.
Good morning, Scotty.
CEO Theo Spierings.
Good day, Scotty. Good to see you again.
Fonterra CFO Lukas Paravicini.
Good morning, Scotty.
And finally, our Shareholder Council Chairman, Duncan Coull.
Hi, Scotty. Good to be here.
Gentlemen, a lot to talk about on the half year, but I guess, John, overall, tough time for farmers right now.
Yeah, it's incredibly tough for our farmers right now, Scotty. This is a result of the imbalance, supply and demand imbalance of dairy globally, unsustainably low and for longer than what had been initially anticipated. It's putting a lot of pressure on our farmers. It is impacting farmers all around the world, but of course for our farmers, where we export about 96% of the milk that's produced in New Zealand, as opposed to many other farmers around the world, which are predominantly domestic markets, it hits our farmers a lot harder. So really tough for our farmers, their families, and really hard on our young share milkers in particular.
Well, is there anything in these results to lift the mood out there?
Well, the results are very good. Theo and the management team have driven a good result through this first half of the year. An absolute focus on getting as much milk as we can into higher value products, and of course ensuring that we get as much cash as we can out of the business. So we're delivering a net profit after tax of $409 million. So that's over double what it was this time last year. So yes, a very good first half year.
John, still plenty of pressure though on that milk price?
Yes, the forecast milk price is $3.90 per kilograms of milk solids. Reflects the imbalance that we've got in Europe. Too much milk coming out of Europe at the moment still. And of course the global financial markets are very fragile at the moment. So we are anticipating these prices being low for longer than we had initially thought. Now look, very importantly today, with that strong $409 million profit, that we are able to announce a 20-cent dividend to our farmers. That is double what it was this time last year. So a total payout forecast at this stage at $4.30. So I'm sure our farmers will appreciate that small but important impact on their cash flows.
Yeah, in August last year, you introduced the co-op support loan. What has the board discussed around assisting farmers through these difficult times?
Yes, so we have given that a lot of thought, and management have been working on this over the last little while. Fundamentally, we did think about whether we should extend that cooperative support loan or not. We've decided to not extend it, but far more importantly, we've looked at the cash that has been brought out of the business, and we're able to announce that we are going to bring forward what would normally be a dividend that was final dividend that was paid in October. We are going to bring that forward to May and to August. Now, it will be subject to board approval in May and August, but we've got a lot of confidence of what is happening within the business, so we can use that strong balance sheet to forecast a 10-cent dividend payment in May, a 10-cent dividend payment in August, and so that's a 40-cent dividend payment for the year. Yes, the May and the August ones are subject to final board approval. I think importantly, Scotty, this is within the board policy, and we are forecasting a balance sheet, debt levels coming down significantly from where they have been, and a balance sheet in that range of 40 to 45%.
Thank you, John, for that. Duncan, if I can bring you in here, obviously for farmers and accelerated dividends are pretty good, but what are your thoughts around this?
Yes, Scotty, it's good to see the co-op supporting our farmers in these tough times, to some extent providing some certainty in these uncertain times. And I think really for us, it's about the co-op recognising the on-farm realities and responding accordingly on the back of strong results. So it's good to see.
Let's get back to the farm for a moment, John, because you were forecasting production off farms would be down. Is that the case?
Yes, production's down approximately 4%, and we're forecasting it to be down 4% for the year. We have seen a lot less supplement fed, stocking rates are down, but also pleasingly, we've actually had really good weather across much of the country, not everywhere. Some of us have had some drier areas, but certainly across the country, a lot of cheap milk being able to be produced, which is, thankfully for our farmers.
And the effect of El Nino, was that felt across the country?
It's the trouble with weather forecasters and economists. No, there wasn't much El Nino as it played out, which has been good for our farmers.
Theo, I'd like to bring you in here. The financial year kicked off, and you talked about keeping up the pressure to reduce costs and to lift profits. Have you got the results that you were after?
Yeah, we have the results, but I have to put that into the context which John just painted. For me, there's really two buckets. That is what John spoke about. The milk price is or the number 390 is an unsustainably low number from any perspective, but that's due to the global imbalance. But those are things we can talk to our organization for a long time, but we can't control that, or we don't have a rope around that, if you like. But on the performance and a stronger co-op, building a stronger co-op, that's what we can control. And that's why we're constantly after our key businesses of ingredients, consumer food service, but also the transformation program, because in tough times, we have to transform the business and we have to adapt to the new realities. But when you ask me the things we can control in bucket 2, on ingredients, in my opinion, very good results. On consumer food service, strong results, and shifted a whole lot of milk from a 4% returning business to a 25% or 30% returning business. And the transformation, thousands of initiatives, and predominantly the initiatives are going well. But sometimes we could have done things better as well, but we bring in the results, we reduce costs, and we are building a stronger co-op. Yeah.
Duncan, Shareholder Council's performance team have been through these results. What's Council's view?
Look, Scotty, I think in line with forecasts and Council's expectations, and we'll communicate our view of that to shareholders in due course. But I think what is encouraging is that on the back of weak global demand, more volume has shifted into high value, which is really encouraging in terms of that strategy working. So I guess the third thing I'd just like to touch on is that I think we've got some momentum there and we look forward to that continuing. So.
Thanks for that, Duncan. Theo, I guess we'll come back to you. Take us through the numbers.
Yeah, so the overall numbers are portrayed in this slide, and you can see one change. This is our normal way of reporting, but one change is that normally we report metric tons of products sold, and here we go back to litres. So quite an impressive 12.6 billion litres of milk being sold by our sales forces all over the world. The revenue line down by 9%. Why is that? Because of the low commodity prices. But what is really good here is that the gross margin is strong. So we are selling the right products, driving gross margin from 16% in absolute terms to 21%. And that has resulted, next to the cost control we spoke about before, that results into an EBIT of 665 million and a net profit of 409. The 409 is roughly 25 cents earning per share. And what John already said, the interim dividend which we propose here is 20 cents. When you look at the different businesses, ingredients, 6% volume growth, good gross margin, and a very, very strong EBIT number of 617 million. And consumer food service, we've shifted. We always look at our people across the world. How many litres do you shift to this business? Because this business returns 25 to 30% return on capital. So we want as much as possible. Over the last 1.5 years, we have shifted close to 1 billion litres of milk. That's significant volume into this business. And at good margins, you can see here, delivering an EBIT of 241 million. Next to this, like I said before, the transformation is important, but I touched already upon that before.
Theo, a lot of good signs there, but international farming, the arrows appear to be going the wrong way. Can you discuss what's happening in international farming?
Yeah, there's two key reasons in the farms which we have built in the past. There's more and more animals are getting into production, so volume is increasing. And at this point in time, milk price, like all around the world, milk price in China is low and has gone down by 1 RMB per litre. We are managing our cost base very, very tightly. So we have taken 1 RMB cost out, but the milk price is also 1 RMB lower. So that's the key reason. So milk price, like in the rest of the world, is on an unsustainable low level. And that will come up. And if we keep our cost under control and capture downstream value from our consumer food service business, then we have an integrated, strong business in China for our brands with safe milk.
Well, let's get behind the numbers for a second, and these businesses in particular, the ingredients business. Can you give us a little bit of the behind-the-scenes story on why that business is where it's at?
The business is actually quite consistent with second half of last year. So a very strong performance. Last year we ran the business at 1 billion EBIT for the whole year. This year, first half year, again a very strong performance with 617 million EBIT. What you see as well is that we sold 6% more volume, and that's because we have sold the inventory, or part of the inventory we had at the beginning of the year. We have already sold it in the first half. The globally traded arena is quite unstable and imbalanced, but we have found ourselves with ingredients actually 6 months with a strong order book, so good volume and value.
And can I assume that low dairy prices are actually helping your consumer and food service businesses as well?
The cost of goods sold is definitely set by the milk price.
Well, Lukas, if I can bring you in here, and similarly, I want to ask you about the consumer and food service businesses. I assume low dairy prices are good for business.
Yeah, to a point, of course, it is good for the EBIT that we generate in the food service and consumer business. But at any milk price, we will always aim to increase the demand, especially in those 8 key markets that we have. And we have again, in the first 6 months of 2016, been able to shift 235 million litres of milk into higher value products. And it has been a broad performance across the region in terms of growth, especially also driven through our food service business that has been very successful again.
Well, Lukas, if I can stay with you as we have a look around the regions, let's go first to Asia and the business there.
Yes. Asia, like all the regions, has done very well, has grown 7% and has almost doubled its EBIT to 108 million New Zealand dollars, driven through the food service business, but also through the Sri Lankan business that does really well, helped by the low input cost. If you go next to Asia, you also have Greater China doing very well, getting to a record EBIT of $65 million at half year. Driven again by food service business that has expanded in more cities in China, but also through our UHT business that is doing well.
Lukas, what about Latin America? What's happening with Fonterra there?
Again, also Latin America has shown a good performance, especially in Chile and Brazil. We have challenges in Venezuela, and we are managing Venezuela to a positive cash flow, which is our key focus right now.
All right, and that brings us neatly back to our own neck of the woods, Oceania. What do you see happening there?
Absolutely, and again, Oceania has increased its performance, very good growth in New Zealand, good growth in the domestic food service business in Australia, resulting in a significant improvement of EBIT, delivering $33 million at this first year.
Okay, Lukas, what about Australia? Let's discuss what's going on there.
Yes, absolutely. We are not yet there in Australia. We need to progress along the lines of the plan that we have set out there. We want to come to a break-even point at this year still. But we have progressed well with our plan in terms of focusing on delivering more volume through Darnums, creating more volume by rebuilding Stanhope, creating that cheese opportunity that we have. And we will focus for the rest of the year and also the years to come in actually filling Darnum and completing the build of Stanhope. And very important, we want to come to a break-even point at this year, leading into next year.
Theo, if I can bring you back here at this point, farms are part of the wider milk pool strategy, is that right?
Yeah, that's right. But let me go back to one of the first slides which we prepared in the cooperative. That's when we talk about the milk pools. Of course, New Zealand milk pool is for us first and foremost. That's the most important. Yeah? We have to create maximum value from New Zealand milk. But the New Zealand milk pool, if you put it in the context of globally traded milk, New Zealand milk pool is 20 billion, globally traded 66 billion, and the total milk pool is 400 plus billion. So when we talk about long-term perspective for dairy is good, then we talk about total consumption around the world in the big global pool of 3% growth. That will drive the globally traded volumes as well, because consumption grows in developing countries and milk is produced in the developed countries, like here at home. So we want to keep our sharing globally traded and on a global level, and that's why next to New Zealand milk pool, but New Zealand milk pool needs to create maximum value. We look for milk in other milk pools, but that needs to create more value than what we create at home, because it needs to increase the dividend stream to our farmers.
Thanks for that, Theo. Lukas, I'm bringing you back here because end of last year there was a lot of talk around financial discipline. So let's start on that, and we'll start with working capital.
Yes, absolutely. We have continued to focus on our efficiency on working capital. Yet another half year where we have improved our working capital days down to 76 days. That obviously has a direct impact on the cash flow we generate, the free cash flow, which is, in other words, is basically the cash available to the company after you have paid your expenses and you have paid for your investments in the first half. That has been a positive outcome, and that has been generated basically by a higher earnings and a tight management of working capital, so like inventory is going down, but also by reducing and adapting our investment to the needs at this half year.
Well, John, before we move on, there has been a change in vendors' terms, and that's attracted quite a bit of attention. Can you take us through the thinking here from a co-op point of view?
Look, clearly we haven't handled this as well as we'd like to. This actually occurred back in 2011, and I'll ask Lukas to go through it in a little bit more detail in a moment, Scotty, but we started this in 2011, and this is actually about consistency and simplicity to ultimately get money into our farmers' hands. And last year, we sought to align all of those payment terms that we've had back to that 2011 period. Now, clearly from a Fonterra perspective, we know the huge impact that we have in the communities across New Zealand. So many of our communities, people supplying us with goods and services. So we did not want to impact negatively at all those smaller family businesses out there. So fundamentally there's two things. First of all, the judgment of where you set the line. Now from a board's perspective, we are comfortable with what's occurred there. But the other part of it is how we communicate. And so as Theo and Lukas will both attest to, clearly we didn't provide enough support to some of our people, and they weren't able to work so well with those vendors. Now I know that the team are doing a lot of work with those vendors right now.
John, let me put a little bit of context around these payment terms that we have changed. Remember, when Fonterra collects milk from its shareholders, we produce a product, store it, ship it to the world, sell it to our customers, and wait for approximately 60 days for the customers to pay. That whole process can easily take up to 6 months. In terms, we have asked 1,000 vendors, which is less than 15% of our total vendor base of 8,200 vendors in New Zealand, to align to those payment terms. In average, we have moved these vendors from 20 days, 30 days after the end of the month to 60 days after the end of the month. That is indeed a shift and extension of the payment terms of 40 days. There is no such thing as 90 days. I do recognize we have done this with pace, and as I said before, we will increase the communication to the vendors, but also to our own people and shareholders to make sure that we get enough information out there for people to be able to answer what we have done, to align our business, like we have decided in 2011, to the business cycle Fonterra has, and make sure that we manage our working capital as tight as we can for the sake of our shareholders.
Well, thanks, Lukas. I'm sure the farmers really appreciate that explanation. And now to an explanation of another kind, and that is the co-op's overall financial position.
Yes, financial discipline is key for Fonterra. It's key for its shareholders as well. And we have progressed again well in this sense. We have delivered a better gearing ratio at half year than we have at last year. And you have to consider when you look at this gearing ratio that this is after we paid a higher dividend, after our strategic investment in being made, but also after a significant increase of capex last year to invest in the future. So overall, a very good gearing ratio. And we are well on track to deliver what we said earlier, a 40 to 45% gearing ratio at the end of the year. And also from a credit rating point of view, we are in a very strong position. We have the best rating in the agricultural cooperative segment of the rating agencies. And it is also very strong within the Australasia environment in terms of rating.
Well, the big question, though, gentlemen, is will and when will milk prices recover? John, Theo, can we look now at the outlook?
Well, the supply and demand has been in balance for the last 18 months or so. If we really try and simplify it down, and we've talked about volatility a lot over the years, Scotty, in these sort of discussions. For my mind, there's been 4 key factors. The first is that in 2013-14, we had very, very high prices. That was created mainly by less milk being produced in China and huge demand for particularly whole milk powder at that time. Now that happened to coincide with European farmers looking to quota coming off in 2015, and so they started to invest significantly based on those higher prices. And so we've seen a lot of investment across much of Europe for farmers to produce more milk. Now, of course, in the middle of this, we had the embargo which came on from Russia. So those are the four key factors: high prices, China supply, different supply impacting different demand over a short period of time, the Russian trade embargo, and a lot more investment for European farmers. Now, that's about 4 to 5 billion litres of milk, turning up in that 66 billion litres of milk that Theo was talking about earlier. So it has a big impact on that imbalance. Now, importantly, we are seeing strong consumer demand globally. It's patchy, but strong consumer demand globally of that 2 to 3%. So we don't believe that the market is as imbalanced as the pricing would currently indicate. Now, yes, prices are going to take longer to come up, but we don't believe it would take much. A weather event, perhaps embargo being lifted in Russia, European production coming back to more traditional growth levels. All of these things we think would change the market sooner, but otherwise we do, and we've got a view at that $3.90 looking forward later on in this calendar year.
And Theo, are you aligned with that kind of thinking?
Yeah, very, very much. But what I said before, I mean, yeah, that is something we can speculate, and we cannot control. What we need to drive is what we can control, and that's our business, and that's the strength of the co-op. Yeah, and that's our ingredient business, food service business, and the transformation. It hurts. I know that sometimes we make mistakes, but that's what we have to do every day, because that will drive cash to farmers and options. Yeah, what we have shown today.
Duncan, I know that we'll have meetings throughout the week with shareholders and with your shareholding farmers, but what about from your point of view, your final thoughts on what we've discussed in this broadcast announcement?
Look, Scotty, I don't think farmers need reminding of just how tough things are out there for them right now, but I also do know that farmers are proud people, and some will be coping better than others right now, so I think it's imperative that we provide support to our farmers where we can, when we can, and we stay connected with one another. I think that's really important right now. So on that note, I would encourage our farmers to come and be connected with their co-op next week during those interim results meetings up and down the country.
Thanks for that, Duncan. John?
Repeating really what Duncan has just said, how tough it is for our farmers, encourage farmers to talk to each other and work together to get through this tough time. But I hope what farmers have seen today, Scotty, is that their cooperative is in a very strong position, and we're using that strength to get every dollar we can to our farmers. As Theo and Lukas have touched on, yes, there has been the odd thing that we haven't done quite as well as we'd like to, but fundamentally, we've pulled more cash out of this business than we ever have. We're producing a record first half year result as far as a dividend through to our farmers. And for those farmers that are shared up members of our co-op, and those farmers that took up the support loan, that's 70 cents a kg of milk solids more than the milk price. And it's at times like this that is the strength of their cooperative coming through. And I'd also really encourage our farmers to talk to their farm source guys, and they are looking to provide support where they can for farmers as well. So it is a tough time, but we'll all do what we can to get money into farmers' hands. And just as Duncan touched on, really encourage farmers to come along to the meetings next week and listen to what is said, and certainly talk to us about what their concerns are.
Well, John, thank you for your time. Theo, Lukas, Duncan, thank you for yours, and thank you to you watching as well. Don't forget, get along to the Farm Source website, make sure you check the schedule of meetings, and as Duncan and John have both iterated here in this broadcast, get along and have your concerns heard and get the information you require. Thank you for being a part of this today.